Okay, welcome everyone. We're going to go ahead and get started with the webinar today. Take control of your credit score. I'm going to be your host, Chris Ruth. I'm actually a loan advisor here with First Service. I actually been on the financing side for a total of 20 years between First Service and actually working at the car dealership as a financing manager. The presentation is going to be by Mrs. Ané Coleman.
Hi, everyone. My name is Ané Coleman, and I'm the Tunnels Branch Manager for First Service Credit Union. I've worked at First Service for the past 16 years, and I've actually worked in the credit union industry for a little better than 30 years. So feel free to email me or contact me at the number shown on the screen at any point in time, and I will be more than happy to assist you with any of your credit union needs. Today, we're going to cover some very important topics, but just in the way of a brief outline, you'll see here what you will learn today. One, what is a credit score? You'll also learn why does my credit score matter? We'll cover what does my credit score mean, common credit score myths, and how to take control of my credit score.
And right before we get started, now's a good time actually to go and pull out your little mini brochure that we have with Take Control. This kind of going to give you a little outline of everything that we're going through and also give you a visual. If you don't have this, send an email to marketing@fscu.com and we'll be sure to get that to you.
So we'll begin with section 1. What is a credit score? Your credit score is a 3-digit number, and that 3-digit number assist or will help the lender to determine risk. So that's the most important thing that you want to remember, that it helps a lender primarily determine risk. So we're going to begin by covering each and every section of the pie chart that's shown on the screen. This pie chart will exemplify areas that you need to focus on to enhance your credit report, and that you will see areas that range anywhere from 10% of the pie chart to 35%. The very first and by far the most important portion is payment history. Payment history represents 35% of your FICO score, which is extremely significant. So you want to always make sure that you not only make your payment, not just make your payment on time, but pay those monthly payments ahead of time, because a delinquent payment or a slow payment can have a huge impact on your FICO score. The second, and again, a very large portion of the pie, is credit utilization rate. That covers 30% of the pie. And again, we need to focus on these two areas primarily, because these two areas combined represent 65%, upwards of 65% of the pie and of your FICO score evaluation. Credit utilization simply means how much of your credit have you used, simply. If you have a $1,000 credit line, you'd want to keep that balance no more than 30% of the credit line. So in that instance, it would be a balance of 300. Once you exceed that 30% threshold, at that point, it starts to have a negative impact on your credit score. So again, always remember these words, that capacity is king. The more borrowing power you have, the more capacity you have, that is what enhances your credit score tremendously.
And definitely with that too, it's not saying do not use your credit. So if you have $1,000 and you need to use 500 of it, that's what it's there for. Definitely use it. But the ideally to keep your score at the higher point, you'll like to be under the 30%.
Thirdly, the length of time you have had credit accounts represents 15% of the pie. Again, this is still a significant portion of the pie, and it behooves you to pay attention to how long you've had certain trade lines. We call them trade lines or creditors. I always like to use myself for an example, because when I was in college, I received my first credit card from Sears and Roebuck.
Never heard of them.
You may not have, but I have, because it was a very important trade line to me. What did I do first Chris, when I obtained that credit card and I was in school with no job, did I go in charge or did I just?
Like most other young people, you wouldn't charge it all.
Exactly.
If not a little bit more.
Did two bad things. I charged it, and not only did I charge it to the max, and I was unable to pay. But eventually, there came a time when I was able to pay that card, and I recognized that even though it had pained me in the past, and it dinged my credit bureau report tremendously, it was golden.
Yeah.
As best
Yeah.
that I can explain, because I kept that credit card for many years, decades actually, and because it was my oldest trade line, it enhanced my credit and I never closed it.
Yeah.
So again, your very first credit line, your oldest trade lines and companies that you've done business with, pay them well and maintain that credit. Hold on to it. New inquiries. I've always advocated not doing too many inquiries on your credit report, not having inquiries done unnecessarily, because these impact your credit score as well. It only reflects 10% of the pie chart, but I like to say it takes 100 pennies to make a dollar. Focus on that area as well, because it's a significant part of the pie. You only want to have inquiries done when it's necessary. And later on in the webinar, Chris and I are going to talk to you about the difference between a soft pull, a soft inquiry versus a hard pull or a hard inquiry. So keep in mind, there are two different types of inquiries that can be done.
And the main thing with the inquiries too is a lot of times you get multiple inquiries when you go to a car dealership. And those are things, again, we'll talk about a little bit more, where we don't want them to shotgun. When we say that, that means shoot your credit everywhere, trying to determine something when you have us to help you do that.
Credit mix. Credit mix is another portion of your credit file that's so very important, and we're going to elaborate on it throughout the webinar. But for now, we want to just identify the different types of credit that you will have an opportunity to take advantage of. We have installment loans, which Chris will talk a little bit about. We have revolving credit. We have unsecured credit versus secured credit. So you want to have a credit mix. One type of credit solely does not represent a mix. So you don't want to have a credit report filled with credit cards and just not have used any other type of credit. And we'll talk about the advantages of the different type of credit as we get further along in the webinar. So why does my credit score matter? Now that's a valid question, and we will give you some information as to why. And it's not solely because of loans, and it's not solely because of interest rates. There are so many other reasons that credit score will help you. Of course, initially, you'll have the advantage of having low interest rate personal loans and low interest rate business loans, but also when you apply for a job, that is a time when the employer is going to possibly, and in this environment, it happens more often than not, pull your credit report and use that as a grade, as a report card for you. So it could make the difference in you're getting a job that's $25,000 a year, paying $25,000, one paying $75,000, because they look at how you maintain your credit to determine whether or not you're mishandling your credit. That would let them know how you're going to address the job that you're potentially being considered for. And again, in our industry, Chris, we know how very important it is to make sure that we have good credit, because we can't help our members or give them direction if we don't handle our credit properly.
It's basically just what you're saying. The credit score is really part of your resume now.
Yes.
You're going to create your whole resume, but there's a possibility that they'll go out there and look at it, and they just want to see if you're responsible. Right. That's all credit is, being responsible.
Exactly. So again, it's not just the interest rate it's on loans. It's when you apply for a job, and it's also when you decide you want to rent an apartment.
Yeah.
If your credit score is tarnished, you're going to be the one that pays the higher deposits. If your rent could have been 1,500, but because of your score, you're having to pay 1,700. All those are monetary impacts that can well be controlled if you manage credit correctly and you focus on the importance of the FICO score.
In some places, just won't let you in.
That's true.
They'll just say, unfortunately, we won't be able to help you.
Right. It's such a determining factor. How bad credit hurts you. It negatively impacts your ability to rent an apartment, which is what we just discussed. It could come right down to whether or not you have the home or the apartment, the living space that you desire. Potential employers may be interested in your credit report. We can't express that enough. In this market, the job market is so very competitive at this point. You want to give yourself that extra boost by knowing and having that confidence that your credit score is in a good place. What does my score mean? So we see here that 3-digit score can range anywhere from a low of 300 to a high of 850. So in this first instance, if your score is between 300 and 579, that's considered a very poor score. I like to think that we can put a little twist on it by saying to error is human. There are so many instances where situations arise that are totally out of our control, and those situations impact our credit scores. But we learn from the situations, and even though it seems like it's a poor situation that we're in, contact the credit union. We're here to help you along this journey so that you can increase your credit score and feel comfortable.
Yeah, that's definitely what we're here for. There's times that the help is going to be needed, so we're going to try to work together and formulate a game plan so we can help each other.
A score of 580 to 669 is considered a fair score. Still, even in this range, the interest rates that you're going to be charged, the impacts of the score in this area may not be exactly what you desire, but it is a light at the end of the tunnel. You can see that light approaching.
Yes, and to say fair is being at 580, because you'll see on some different, they'll still consider 580 poor. And actually, that's not totally the case. The reason why we put that range in there to being fair is because there's things that's happening. That's why we look at your credit history, we look at relations, a whole lot of things that are going to determine, if we're able to move forward on something. So it's definitely a start point, like you say, to seeing the light at the end of the tunnel.
Mm-hmm. Scores from 670 to 739 are considered good, but we want you to keep in mind, good is the enemy of great. You're headed toward greatness, and we want to be there to support you and to give you the guidance that you need so that you can attain not just a good score, but a great score. 740 to 799 is considered a very good score. At this point, you're starting to feel how wonderful it is to see those single-digit interest rates. Because again, there's a huge monetary savings whenever you apply for a loan. As Chris mentioned, we don't use those scores to determine approvals or rejections, but those scores are used for pricing. And the higher your score, the lower your interest rate is, and the more money that you save. And that's what the credit union is all about. We're about helping you to save money. So at this point, you can start to exhale and say, ah.
Yeah, it's kind of, with me being a Saints fan, this is where you're in the Drew Brees category from the 740 to 799. Unfortunately, there's another guy, and this would be considered Tom Brady, going to 800 to 850.
Okay, and that is excellent. Tom Brady is excellent.
Unfortunately, he is.
Yes, and when you get to this point, we'd love to have a testimonial for you, because we're going to be with you from the beginning up to your 800 and 850. And at that point, you're excellent. We want you to know that you're excellent, and we want you to share your experience with our members as well. Common credit score myths. This is my favorite area, Chris.
Oh yeah, this is porch talk right here.
Myth one, a pay raise or a better job will automatically raise my credit score. That is definitely not true because there's nothing on the credit report that indicates what your salary is. That is just not information that a creditor, a lender, or anyone else would see from your credit report.
Yeah, this is equivalent to the myth of having a red car versus a white car or silver car. Red cars have a higher interest, have a higher rate on your insurance. But insurance people don't know what color your car is. Same thing when it comes to this. Experian, Equifax, TransUnion, none of those guys know what your salary is. Only the lender's going to know that when we're talking to you. So this is definitely a myth.
Okay, a good credit score must mean you are rich. What a good credit score means is that you understand credit. And that's what we're here for today. We're going to give you some of the information that you need to be armed with when you decide that, okay, it's time for me to work on in this area and it's time for me to improve in this area. And there's no time like the present. You can never start this process too soon. So again, a good credit score means that you understand credit. Carrying a balance on my credit cards will help boost my score. Carrying a balance on your credit card does not hurt your credit as long as you manage that credit correctly, as long as you manage those balances correctly. You don't want to, as we mentioned, exceed 30% of the credit line. And as Chris mentioned, if you utilize credit that exceeds that 30% threshold, you can help yourself in two ways by paying it off each month. You save on interest. You pay absolutely no interest if you pay that balance in full by the billing cycle, but you've had the advantage of having that impact your credit score positively. There's no need to worry about my score until I'm older. That is absolutely not true. That is a
Definitely not
myth.
true. Definitely not true.
You want to start addressing FICO scores, learning about credit, and understanding what it takes to maintain the highest and best credit score as soon as possible. Because early on, especially in our environment now, we encourage a lot of our young people to purchase homes. Just think, if you were to rent an apartment for 10 months at $1,700 a month, you've paid $17,000 to enhance someone else's financial lives. We encourage people to become homeowners as soon as possible. So again, you want to start laying that groundwork as early as possible, sooner than later.
Yeah, it's real important because especially just to hear this, it kind of hurts me because they do have a lot of people feel like, hey, I get to live it up and not do anything, not worry about it, and then I can always catch up. And that's definitely not the case. Why catch up when you can be in the game immediately? So
Exactly.
it's definitely something that you want to take advantage as soon as you can.
Mhm. Because we're all about helping you to save. Student loans can't affect my credit score. Student loans are so very important in that they affect your credit scores from day one. As soon as you graduate from college and that payment becomes due, you need to make sure that that payment is paid in a timely fashion, just as you would any other creditor, because if you fail to do so, it will have a huge ongoing impact on your credit scores. I like to encourage people to check with your lenders if you have not found a job, if the job that you have doesn't put you in a financial place where you can pay the loan. Contact your lender because you probably are not the first person who's encountered these difficulties, and they're sure to have something in place in the way of deferments that may assist you. Take advantage of those deferments. They're there to help you.
Yeah, and I think a lot of people get mixed up with this is because when you're in school with student loans, it's deferred. So that's why you're thinking it doesn't affect your credit score. But
Mhm.
as soon as you stop, which is typically, as soon as you stop school, they'll let you defer usually from another 3 to 6 months. Now is actually going to begin to affect your score. So when you listen to people say things like that, they're not correct, but they're not wrong neither. It's all about the timing and when this is going on as far as when that deferment is being. Then once the deferment is gone, now it's about to definitely affect your credit score.
That's exactly. Thank you so much for that, Chris. Closing credit cards will help raise my credit score. Chris, we know that that is absolutely, positively wrong. Why don't you tell them why that's so wrong?
Because what's happening is when you close that card, let's say you had a $2,000 card and you closed it out. Well, now, depending on what your credit lines on your credit report, whatever it was is minus 2,000 now. And that's where you just saying earlier, where you want to have a mix, different things going on with your credit. It actually just, you're just feeding your credit score. So you definitely don't want to close a card, pay it down to zero, just hold it.
Capacity is king.
Yes, it is.
That it is. Debt is actually good for my credit score. As a parent, I've always told my children, don't borrow it. If you don't need it, you don't borrow it. You only borrow what you can afford to pay. So if you keep those two things front of mind, that's food for thought. I'm going to give that to you today and hope that you adhere to it. Never borrow more than you need. Do not borrow unnecessarily, and do not borrow anything that you can't afford to repay comfortably.
Right. Yeah, the best way to think about this sometimes is when you hear someone say that is actually good for my credit score, it's a yes and a no. What you're saying definitely is you don't want to overdo anything because for one, why are you just getting it to get it anyways? But your credit does want to see certain things circulate through it. So it's like a car. You need oil change. You need to drive it every once in a while just to make sure everything is moving. But at the same time, you don't take that car and go put it on the freeway and drive 150 miles an hour. That's overseeing. You don't need it to do those type of things. So those are things you want to think about when you're working with your credit.
Chris, I loved your analogy about the glass of water. Can you share that with us in case my kids are listening?
Yeah. Hey kids, if you are listening. But the biggest thing is when I was telling with your credit, if you count it as a glass of water, you have the whole glass, you can fill it up all the way to the top if you like, but try to walk with it. Some things are going to spill. But in the same token, if you fill your glass halfway, just because the glass is however tall doesn't mean you're supposed to fill it up all the way, unless you're a kid trying to drink the Kool-Aid. But now it's going to be more accessible, it's more easy to work with. Just because you have it doesn't mean you have to use it all.
It's manageable at that point.
Yeah.
Examples of good debt. I always like to say any debt that's improving your financial life, any debt that's making you, just making you a better person overall. What's improving my life? What's improving me from so many aspects of my growing and becoming the person that I want to be? We always encourage home ownership. That's the American dream, to be a homeowner. So that's a positive. It's collateral behind that loan. So it's a positive. And you're building equity, cash equity, as opposed to paying rent and enhancing someone else's financial life. Automobiles, an auto loan, especially here in Houston, that is a necessity.
Oh, yeah.
It's collateral. It's an asset. It's a good form of debt. Student loans are going to enhance your life. You're learning, you're growing, you're putting yourself in a better position because now you can apply for the job of your dream because you've obtained that education. All three of these enhance your life and are considered good debt.
Yep, good debt. So good debt, the best way to think about it is when your parents used to tell you sit down and eat your veggies, that's the good debt. And then you go into bad debt, which is going to be like the kingdom, make your tea rotten.
And here it comes. You're full of analogies, very good ones, I might add. Examples of bad debt. High interest credit cards. We talked about that earlier. Those high interest rate credit cards can actually bury you.
Yes.
You can get to the point where if you're making minimum payments, you're just throwing that money out the window.
Yeah.
Constantly. High interest rate personal loans. Again, Chris talked to me on an occasion about, from his vantage point, being a loan advisor, he's had members to come in with interest rates in the double digits, like 33%, Chris.
Yeah, they come basically with offensive lineman numbers,
Mhm.
and we want you to be down to quarterback numbers. So, with the payday loans or certain items like that, when you're getting 33%, 50%, uh, it gets pretty rough. And every situation is different, so we're definitely not here to judge or anything like that. We just want to make it better, and also that you can sit here and learn.
Right. And our highest rate is what, about
It's
18?
18%.
18%. Any loan you can't reliably pay back, and that was my food for thought earlier. Those are my consistent words to my children on an ongoing basis. If you can't afford to pay it, you probably don't need it. And that's something that you can table. Just if you can't afford it and pay it back comfortably, don't borrow in that area.
Oh yeah.
Checking my credit score will lower it. That is a myth, and we want to make sure that each and every one of you know that that's something that you want to do on an ongoing basis. You want to do just the opposite. There are so many avenues where you can check your credit on a regular basis. The federal government actually, on the annual credit report site, will allow you one free credit report a year, because the federal government even encourages you to just, even if you're not borrowing, pull the credit report and check it. But we like to tell you to check it on a monthly, weekly, even a daily basis, because you have your mobile device in your hand. You can have your Experian app on that device, and you can check it just to make sure that you're moving in the right direction. And set a goal for yourself. You want to be excellent. 800. So each day it's
Yeah.
encouraging to look at your score and see it going up day by day.
Yeah, just like you're saying, there's a lot of avenues where you can go, whether it be Experian, Credit Karma, all these different avenues that they'll actually monitor your credit for you. Now, of course, on there, they're going to have different advertisements because they're trying to get you to do some things sometime or even purchase some things. But when we say checking your score, this doesn't mean the dealership checking your score. That is an inquiry that will affect it, but will affect it. But by you having these monitoring systems, looking at them, then that will not affect your score at all.
Right. And we're going to talk about the soft and hard pulls
Right now.
right now. That's right. Examples of soft credit inquiries. All the time. You can check your score as many times as your heart desires, and it has absolutely, from the channels that we've mentioned, the apps and whatnot. If you do soft credit reports all day long, it has no impact on your credit scores. Auto insurance quotes, employment verifications, and background checks. All of these are areas where soft credit inquiries are done, and it has no impact on your score.
And just so you have an idea, the soft credit, this is basically when in the mail when you get all of these pre-approvals. And I do stress the word pre. They haven't pulled your credit, but they have some knowledge. That's why they're giving you a pre-approval. And then once you call, get online, and then actually click everything, that's when you get the hard inquiry that comes in 2 years.
Mhm. All right. So examples of hard credit inquiry, as Chris just mentioned, a car loan application, a credit card application, a mortgage application, and your student loan application. In all these instances, you've completed an application, you've given them your social security number, and you can expect in these instances that a hard pull affecting your score will result. There is only one kind of credit score. That's myth number 9. And I'll hand over to you, Chris.
Yeah, and this is really, really an older myth because a lot of things going around now. Everybody knows there's different, well, hopefully you know, or you're learning today that there's, 3 different bureaus, and then actually with those bureaus, they may have 3 or 4, 5, 6, whatever different versions of scores based on, it could be your auto credit, it could be homeowner, it can actually even be credit cards the way that they generate it. A car dealership is going to be more driven on auto credit. So as opposed with us, we do everything. So it could be a mixture where you're like, well, so-and-so told me my score is this. I understand, and that is a possibility. It was that when they pulled it from that particular bureau. But when we pull, then it can be, a little bit better. It can be a little bit lower. I don't want to say worse. So That's where the different things where you want to learn your score, learn your credit, or learn the different the different scores which that you're dealing with, and you can do that by with those credit monitoring.
Okay, thank you so much, Chris. Myth 10, paying off bad debts or delinquent loans will erase them from your credit history forever. That is so not true. And this is why 35% of the pie that we discussed initially focuses on paying your bills on time and paying your bills in a timely fashion. One small 30-day late payment has such a huge impact on your credit scores. And it would take such a long time for you to bounce back from that. Why even risk it? Set up those auto payments, as we mentioned. Schedule that auto payment to be applied early on and avoid this pitfall. It's very detrimental to your credit score, but it's very easy to avoid. So again, 35% of that pie is focused on how you pay your bills. It's important that you manage those bills and make sure that they're paid early each month. How do I gain control of my credit score? Prevent missed or late payments by using automatic drafts. We're reiterating that because it's so very, very important. Just remember, whenever you apply for loans here at the credit union or elsewhere, to set up automatic payments, and we're always willing to help you in that area here. Check your credit report and correct any errors. This is so very important because there are a number of reasons why information may be on your credit report that may not actually be your information. In instances of a young man, he may have his father's name, he may be a junior. There could be some information on your credit report because your social is so similar to someone else's. There just is a number of different areas. And in some cases, it's fraud. I actually had my husband's name is so very common. He had a credit card that he hadn't used and it was just tucked away. And someone actually applied for an increase on the card and had the card delivered to California. And they were using the card. And we recognize it simply because of the alerts and our ability to actually review the credit report. So again, we corrected that error, and monitoring the credit report played a big role in our being able to safeguard his credit.
Yeah, and this is just a simple like we just talked about in the previous slide, is setting up for the automatic payments, just kind of make everything foolproof. This will do the same thing for you. You can have those once you go out there to let's say the Credit Karmas or Experian, you can set it up. Anytime there's an inquiry on your credit, that you get alerted on your phone or via email. And that way you say, hey, you know what? I'm not in California, so why is somebody trying to buy a timeshare?
Thank you, Chris. Request credit limit increases on your credit cards. Now, there are a number of instances where the creditors will increase your credit limit simply because you've had a wonderful payment history with them, or they're in tune to the fact that you maintain your credit very well. But there are some instances when the credit limit is not automatically increased. So after a few years, you may want to visit your credit portfolio and see if those increases are available to you. Not that you have to use all of the availability, your new availability, but just to increase your credit scores further, because once again, I can't say enough, capacity is so very, very important. So if you had $1,000 credit line and you have the opportunity to increase it to $2,500, take advantage of it.
Always, definitely.
Consider a low interest rate personal loan or credit card to consolidate or pay off your debt. Those type of loans, some people shy away from them, but a consolidation loan is most helpful. If you have 6 credit cards and all those credit cards are maxed out, you are doing a disservice to yourself. Your credit score is probably suffering as a result of it. To consolidate those 6 credit cards into one low interest rate personal loan, it's going to be so much easier for you. You have one payment that you can set up on automatic draft, and consequently, you have decreased your, you've paid those balances to zero, and you've increased your capacity. And capacity is king. We would see a positive result from this type of action overall over time.
Oh, yeah. And the one thing too, especially when it comes to first service credit union, whether it be a low interest personal loan or a credit card, you'll notice a lot of credit cards that you may have or may be applying for, most of those are going to be above 20%. By earning your higher credit scores with us, your rate on a credit card can be as low as 7.99. So you may even better do a transfer, a credit card transfer over from your previous cards that you have back to first service with that particular debt. So you want to pay attention to the different or the different rates that's on a personal loan and or a credit card, especially with first service, where we can help consolidate or pay off your other debts, make your credit stronger.
Exactly. Take advantage of payment deferrals. This is another area that we're going to touch on again, simply because it's so very important. When it comes to student loans, again, never adhere to this unheard of, totally wrong advice that student loans don't impact your credit report, because they do. They play a big role, actually. So if you have the opportunity or there's a need for you to contact your student loan lender for deferral, make sure that you do that, because those programs are in place to help you. And you don't know what's available to you unless you ask. So don't be shy about contacting your lender in these areas. In this age of COVID, we know that deferrals, deferments will help you with your mortgage. A lot of lenders are being proactive by actually offering you on their site an opportunity to defer your payments in these tumultuous times. So again, don't be afraid to take advantage of deferrals. They're there to help you.
Yeah, it's the best thing I'd like to tell a lot of people about deferrals is life events. It's you still have to pay it, so don't think you're getting away with that. But in the same token, certain things happen, whether it's just a month ago with the freeze that came along.
Exactly.
So that basically, or if you was in the Houston area, it stopped a lot of things from, or not just Houston, but it stopped a lot of things from happening. Going back to Hurricane Harvey, all these things were a life event which you're out of control, and we definitely know about COVID. So you always want to have that communication with your lender. Pick up the phone. Hey, this is going on. Is there any way we can possibly help each other out? And that's what we're here for also.
What not to do when working to raise your credit score. Don't close any accounts, particularly those you've had for a long time and those with a zero balance. So I think Chris and I both have touched on this area. We went back in my lifetime line to college with my Sears and Roebuck card that I never wanted to close because I maintained it for decades. And Chris has outlined for you the importance of zero balances and not closing out those accounts. Once you zero out the balance and you maintain the account, you continue to have the account open, you have 100% capacity. Capacity is king. Don't close out those accounts for these two very important reasons.
And it's definitely going to be a judgment call, because you want to look at also always pay attention to what's going on with your credit cards. And there are some cards will actually charge an annual fee. And if someone's charging you to use their card, if you do not use the card, then I can get it. You may want to close that particular one. That will make sense. But you just want to limit to the ones that you do close, because that can affect your credit score, especially the older ones.
Certainly. Don't stop using credit, but exercise restraint. And we've talked about this throughout the webinar, exercising restraint and managing credit. It's just as the same as you would manage anything else in your life. This is so very important. Place make sure that you have the direction that you need from the credit union and other sources, that you're armed with the information you need to make right decisions regarding your credit, and again, manage it.
Hey, this goes right back to what I was talking about with the car. Just because your car says it can go 150 miles an hour, don't mean you need to go 150 miles an hour.
Right.
But at the same time, you still use the car to go to certain places. So you want to make sure that you use your credit, but you don't need to go out there and just doing all this other stuff. And lastly,
Avoid declaring bankruptcy. Of course, we want to always encourage people to let this be the very, very last resort. There are instances, we know life happens when people have to ultimately declare bankruptcy, but again, try to avoid it at every turn. If it perhaps happens to you, just know that the credit union is still here. We want to guide you. We want to bring you through this phase of your life as well. We want to help you to again regain control in this area and to enhance your financial life. So again, we have secured credit. We have different avenues that we will try to help as much as possible. Of course, we can't always guarantee the outcome because all situations are different. We don't want you to ever compare your situation and your financial aspirations are going to be different from someone else's. Your financial history is going to be different from someone else's. But again, we're always willing to meet with you, help you, and support you.
well, this actually concludes the webinar on taking control of your credit. My name is Chris Root. Like I said, I'm a loan advisor here at First Service. My direct number is 713-676-5281. And for Mrs. Ané Coleman, she's the branch manager at the Tunnel System, 713-676-4339. The one thing we want you to know out of all of this, every situation is different, every credit score is different. So always never feel that you can't reach out to us and we can sit there and talk to you and possibly help or try to guide you, steer you the right direction. The more knowledge that you have, the better things get, and that way you can make your credit, keep it strong or get it stronger.
Exactly, Chris. Knowledge is power. Between the two of us, we have a total combined 50 years of credit union and financial institution experience. All of this, we would hope that you'd feel comfortable to contact us and draw on our experience. Your success is our success, and we're here for you. Thank you.